Everyone, welcome back to the channel. This video is going to be about Wyckoff and Wyckoffian theory and the accumulation and distribution schematics within our POIs. So I know that the last video, this is kind of just going off of what the last video was about. A lot of times price will come into our POI, right? In this case, we have a 1 hour POI here. This last down close candle before the nice up move to the upside, right? That broke significant structure here, and that also broke structure here, right? Making this a valid POI. A lot of times price will come back down in here and just kind of mess around a little bit, right? And accumulate to grab more orders and just ultimately engineer liquidity before taking the market significantly higher, okay? So I actually want to replay this market here. And this was a live trade that I did take. And I want to show you exactly what happened. Going off of the last video again, I explained this in my last video, but a lot of times price isn't just going to go leave its POI, right? A lot of times pricing isn't going to have a nice POI and then come nicely back into it like this one did. Have a picture perfect setup, right? It'll come into the area here. It'll leave the area. It'll break structure on a lower time frame like we are right now on the 5 minute. Okay, and then it'll come back to our entry at another demand area sitting somewhere around here. Okay, so a lot of times it's not always going to be this perfect. Okay, a lot of times price might come down into our POI, right? And then start engineering liquidity inside the POI, right? Making these equal lows, maybe some kind of trend lines to take out. Okay, and then once they take this liquidity sitting under here, we can use this liquidity to take the market higher, suggesting to us the smart money got in, right? If it leaves behind a nice demand area here, we can set our buy limit and then we can take the market higher. Okay, so not everything is so cut and dry and simple as this trade actually was. So let's just replay this market and see exactly what happened. Okay, so as you can see, price tapped in here. It left this area, breaking structure around here, somewhere around here on the 1 minute time frame. You can go see my previous video for more in depth on this, going down the 1 minute time frame. But nonetheless, it left behind a nice demand area here on the 5 minute, right? So this area was left behind, very clean, cut, dry, and simple. We took our buy limit order here, and price continued to push to the upside. Okay, so that's how this trade was taken. But like I said, not all the time is price just going to come down, break structure, and then return to its origin and move higher. Okay, a lot of times it's going to come in here, it's going to engineer some kind of liquidity, whether that being equal lows or whether that being some kind of trend line here, right? Taking out the trend line, then using that liquidity that was just resting under here, right? To take the market significantly higher. And let's look at a better example of that on your JPY. We're going to go onto the daily time frame here and look at the 4 hour as well. So and this brings me to my next point. A lot of times we're always targeting equal lows, right? Because this is where the money is sitting, right? Under these lows, there's just liquidity. And a lot of the times the market is going to use this type of liquidity, right? These equal lows down here for some kind of trend line, some kind of pattern that retail, like-minded retail traders are trading. They're going to use this liquidity after they take it to push the market higher. Okay, so not every point of interest has to be an order block on the left side of the screen. Okay, it also doesn't have to be an imbalance left on the left side of the screen. Your point of interest can literally just be an area where liquidity was taken, right? We had clean equal lows here, okay? And obviously there's money resting under here, okay? So this whole entire area can be considered a POI, right? Because this is where a bunch of orders are at ultimately. So if you do see some kind of schematic, some kind of accumulation schematic here to take the market higher, it is also a very valid setup, okay? You don't necessarily need an order block to be your point of interest and to go off that. So let's just go down to the 4 hour. Okay, and I'm not going to get into every detail about Wyckoff in this video, but we do have a nice accumulation schematic, right? And this is exactly what I was just talking about, what price will do most of the time, right? Like I just said before on UF, on that trade I took, price came down, tapped into our POI, shot back up, broke structure, and then returned to our buy limit so we could take the market higher, okay? As you can see, that's clearly not what happened here. Instead, price started to come down, right? Creating internal structure, creating relatively equal highs up here that were later taken. Okay, price came down, created equal lows to take out, okay? This low and this low were engineered liquidity so that the market could take out and ultimately bring the market higher with this break of structure. And then our order block was formed here. This is a nice 4-hour demand area where we could have taken a trade higher as well, okay? So not all the time is it so cut and dry where there's going to be a nice point of interest. For example, here. Okay, and then maybe price will start to come down, come into our POI, break structure, and then come back, okay? Not all the time is it going to be this clean. And the more high probable setups are the ones that have engineered liquidity already, right? Some kind of Wyckoff distribution or accumulation schematic. In this video, we're talking about accumulation because we're obviously buying. But nonetheless, the market was forming clear equal lows here, right? Engineered liquidity inside our POI, which is where equal lows were just taken. Okay. Took those equal lows out. Let's just mark this as liquidity real quick. Okay, price came in, formed equal lows here, had a false move to the upside, took those equal lows out inside of our POI. So now we know that the sell side liquidity is what? With this candle here at 13 o'clock, sell side liquidity. Okay. The sell side liquidity was taken and the market used the money down here to push significantly higher. Okay. And we had a break in structure. Right here we have our break in structure. Let's tag that. Okay. And then your limit order would have been set at this nice demand area. We had a very nice order block here left behind on the 4-hour after the sell side liquidity was taken inside of our POI. In this case, we have equal lows as our liquidity on the sell side. Targeting equal highs, relatively equal highs, even up here. Your stop loss is going to go below this nice demand area that we were entering off of. Let's move this up, make it realistic. And you have a nice 1 to 11. Okay. So like I said, a lot of the times price isn't just going to come all the way down and shoot back up, break market structure and come back. A lot of times you're going to have liquidity accumulating inside of these POIs. Okay. So you need to be very careful of what you take and what you don't. And it's honestly all up to personal preference. Okay. If you want to wait for the liquidity, which I very strongly recommend, if you want to wait for the liquidity to be taken so that you can push the market higher, or not push the market higher, but get in when smart money is pushing the market higher, that's a better, that is a much higher probability trade than if market were to just calm down into our POI, break market structure, come back and hit our limit, right? Our nice demand area over here. Okay. So this was a short little video, just going over a little bit of, I didn't go into Wyckoff. Okay. And you can do this as preliminary supply, right? So it's climax, secondary test, your spring, your break and market structure. Okay. And I didn't want to get into all of that. I just wanted to show you that inside of your POI, whether it be an order block or an imbalance, in this case, it's a daily POI, right? We have a daily section or area of liquidity where liquidity was obviously taken. We have a nice clean area of equal lows, right? This was our point of interest. Okay. And then we had an accumulation schematic. Okay. So liquidity was engineered here, right? Liquidity was engineered in here just to be taken, right? Strictly to be taken so that we could take money to the upside. Okay. After sell side liquidity was taken. All right. That's going to be all for today, guys. I'll see you guys in the next one. And as always, good luck and good trading.